followers. My name is Steve Doherty. I'm the Raleigh VA loan guy. Today I want to talk to you about the dreaded hard pull on your credit. I actually think that the hard pull is much more your friend than your enemy, and today I'm going to lay out some reasons why you should not avoid the hard credit pull. Okay, reason number one, while the hard pull may have a negative impact on your credit score, it's probably going to be pretty minimal, maybe 2 to 8 points. Later in the video, I'll touch on why that may not have an impact on you at all. The other thing is it's going to rebound in about 30 days. In other words, whatever your score was before that hard pull, it will naturally rebound to where it was before within 30 to 35 days of that first credit pull. Reason number two, why you should not avoid the hard credit pull. Your credit report will be good for 120 days. So if you close on the purchase of your home within 120 days of that credit pull, your credit will not be pulled again after that. And since you cannot avoid a hard pull on your credit in order to get a mortgage loan, at some point you're going to have to do it anyway. So if that takes place within 120 days, that's your one pull and it's over. And to build on that, if you are, let's say you don't close within 120 days. If your credit is only being pulled every 90 days, it's never going to suffer. You're always going to be maintaining the same credit score because your score will rebound to where it previously was before the credit pull. Then 60. So let's say you have your credit pulled, it drops by 2 points. 30 days later, it goes back up to where it was. 60 days later, we re-pull your credit, and that goes on for a year. You will maintain the same credit score. In other words, your score will not suffer by virtue of the hard credit pulls. Now, this is not the case if you're going to have a hard credit pull for different finance purposes. So if you apply with me for a mortgage loan, then the next day you go to a BMW dealership and you apply for a car loan, and then you go to a bank and you apply for a personal loan, those could add up. Those credit inquiries or hard credit pulls for different finance purposes could hurt your credit score. Reason number three, why you should not avoid the hard credit pull. So interest rates are largely dictated by your credit score, right? It is the biggest factor in determining what your interest rate will be, your credit score. But like I alluded to earlier, if that hard pull only affects your credit score by, let's say, 2 to 8 points, it may not change what interest rate you qualify for at all. First of all, if you have a credit score above 800, unless you are applying for a jumbo loan, a loan amount above $766,550, then that modest credit pull, whatever, let's say it is even 8 points, you are still going to be well above the maximum zone for getting the best interest rate possible. After that, pricing or interest rates really work on kind of like a ladder system, right? So and this varies what kind of or what the highest credit score is, depending on down payment programs, etc. But long story short, there is not going to be a different interest rate for a 722 credit score versus a 738 credit score. So if your score goes from 738 down to 730, you're still getting the same interest rate. Could that impact your ability to qualify? Probably not at that high of a credit score. Reason number four, not to avoid the hard pull on your credit. So with a soft pull on your credit, we have limited data in that credit report. On a hard pull, not only do I see everything, the balances on all your credit cards, I get your 3 scores from the 3 separate credit bureaus, but I also have tools, and most mortgage lenders have access to these same tools where they can run simulations on your credit to see exactly what will do the best in order to enhance your credit score. They can determine how much of a balance you would need to pay down on certain credit cards, for instance, to get your score up. It is more challenging and laborious to do this without that hard credit pull. The fifth and final reason why you should not avoid a hard pull on your credit. You don't know exactly what's on your credit report. A hard pull will tell you if you have any accounts in a collections status. This happens fairly frequently with medical debt collections. So let's say you go to the doctor's office. That doctor's office misinterprets the copay that you owe for that service. I see this frequently. That copay, maybe a $50 amount that you in reality owe is now sent to collections. That hurts your credit score. Now, the good news with medical debt, if you pay that off, your score will immediately rebound. So we may be able to fix that in time for closing. But let's say we pull your credit and you don't want your credit pulled until immediately before you're going to make an offer on a home. And you have an account in collections. Maybe it was a cable bill where you returned a cable box and there's no record of it, and they sent your account to collections because they don't have a record of you returning that item. If that sounds like a specific example, I've seen that happen to borrowers before. So now we need to get this fixed. You need to find the documentation to prove to the underlying creditor that this didn't actually happen. Well, how long does that take? That could take 90 days. If you're about to get under contract, we will not be able to get that removed from your credit report before you close on your home. So if you, as soon as you start the pre-approval process, if you have a hard pull on your credit and that's identified, we may have some runway for you to work on that. But again, if we're starting that hard credit pull on the eve of getting under contract, you may be stuck with that lower credit score that's been suffered through no fault of your own. But again, you won't be able to correct before we close on the home. Again, these are the 5 reasons why I think you should not avoid a hard pull on your credit. If you want to talk to me about this, ask any other questions, any other input. There's a lot more to this that I can't include in the video. So if you want to pick my brain, please feel free to reach out. Leave a comment below, send me a text message, give me a phone call, shoot me an email. Again, my name is Steve Doherty. I'm the Raleigh VA loan guy. I work for Advantage Lending in Raleigh, North Carolina. Thank you so much for tuning in.